I'm Jim Jubak, and welcome to my YouTube video for July 14th. I just want to start off by saying thank you for all the people who came to my live Q&A on YouTube yesterday. We're going to do another one in about a month, so subscribe, and that way you'll get notification of when we're doing our next one. If you like this video, please like it. You can get more of my stuff at my free site, jubakpicks.com. It's got 3 track portfolios. You find the link to that down below, or you get more and more on my paid site. That's jubakam.com. Link to that is also down below. So on July 13th, we got June inflation numbers from the CPI, Consumer Price Index, and they were pretty grim. Inflation running at a 9.1% annual rate in the headline numbers. So today's topic is inflation isn't about to get better. There's a lot of talk that says, hey, maybe we've peaked and all that. I just want to point out a couple of things. One is energy costs were up 7.5% in June, month to month, now up about 42% year to year. Food at home, government statistics break food into food at home and food out of home, now up at about 12.2% year to date. To believe that inflation is about to get better anytime soon, you have to believe energy prices are headed down and food prices are headed down. And what instead we've got is, I think, what it looks like to me going to be a rebound for that. This is a chart for the United States Oil Fund. It's an ETF that tracks the price of oil. And one of the things that's really interesting about this when you're looking at inflation is you get a local peak here in June, June 8th at almost $92. And then it's pretty much down. And the reason for that really is, well, 2 things. Fear of a global slowdown in the economy and a rising dollar. What's interesting to me today is that on the inflation news, the U.S. oil fund went up. Same interesting pattern for something called the Teucrium wheat fund. So again, you see a peak around, and this one May 17th, and then down to here. So if you're thinking about inflation coming down, betting that inflation is coming down, you are betting that that big trend downward, recent trend downward, is going to continue for a while. And I think that's, well, wrong. We're about to enter into a second round of Russian retaliation for all the rounds of sanctions on it. That Russia is going to act, because it's a very cheap action to take, it's going to act to cut off oil supplies to Europe from countries that are now independent, but they used to be part of the Soviet Union, where Russia still has a lot of influence. So that, for example, Russia has a recent court case has blocked oil shipments through the Caspian pipeline from Kazakhstan. That's not a plus for oil prices. Second thing, the Russians have obviously decided that they need to disrupt Ukrainian grain shipments to the degree that they can, whether it's by keeping those ports blockaded, whether it's by stealing grain wherever they can get it from Ukrainian storage. But basically the whole idea is make sure that as little grain as possible gets to out of the Ukraine. So I think what we're looking at is a rebound in commodity prices. Commodity prices flow straight into headline inflation, even though core inflation doesn't, but core inflation does eventually get around to adding those energy and food costs later on. So I think as we go into the fall, instead of seeing inflation moderate, we're likely to see inflation stay really, really high. And one of the interesting things about that is that, so there's a Fed meeting coming up on July 27th. The reading before the CPI numbers was roughly a 93% chance that the Fed was going to raise interest rates by 75%, 75 basis points. That's a pretty big, hefty increase. The normal Fed increase is 25 basis points. The CPI numbers come out, and the CME, Chicago Mercantile Exchange, Fed Watch index popped. It says today that there's a 64% chance that they will raise rates by 100 basis points. Before the CPI number came out, the odds for this were about 7%. A huge move. I don't know that the Fed is going to raise interest rates by 100 basis points, but this is what the market expects. The market is saying, hey, on the basis of the CPI numbers that just came out, we're not expecting this to be enough to put inflation back in the box. Thanks for watching. This has been Jim Jubak. If you liked this video, please like it. Subscribe to my YouTube channel so you get notification of when we're doing our next hoo-ha. We're doing about 3 or 4 videos a week. If you want more of my stuff, you can go to my free site, jubakpicks.com. More 6 portfolios instead of 3. You can go to my paid site, jubakam.com, and links to both of those are down below. Thanks very much.